Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. My camera is not on right now because if I turn it on, there's a square on it. Like, you guys see that right in the middle. So I have to restart my computer for that, but I didn't feel like doing it until after I make this video. So the next one that I make will have my camera in it. But yeah, let's get right into this video. This is going to be time frame alignment, right? This is what I use to trade, how I take trades based upon time frame alignment. And once again, all these recent videos that I'm making is going to go directly into the model that I've been trading for the past like 4 or 5 months that people have been asking me about. So, time frame alignment, I have videos on these before, so if you guys are still confused after this video, go watch them. This is going to be a quick introduction and pretty much very simple thing to understand, right? Time frame alignment is very simple to understand, right? So right here, there is two that I'm leaving out, which is the monthly and the weekly. I think I do have them in my other videos, so go watch those if you want to trade higher time frames, but we're day trading, so we're not interested in those. Right, so right here we got PD arrays and time frame. So if we are trading the daily chart, we want to be watching the hourly time frame, right? If we hit a daily PD array, go watch the hourly time frame. A 4-hour PD array, the 15-minute time frame. A 1-hour PD array, a 5-minute time frame. 15-minute, 1-minute time frame, and a 5-minute PD array, the 15 and 30-second time frame. Right, so let's hop right into the chart and go over how you should be looking for the draw and liquidity and how you can find your entries off of this time frame alignment. Right, so we're going to go over Thursday of this week. What do we see right here? A daily fair value gap. Right, what do we do with this candle? Take the low, close inside, come up, take the high, tap into a key level, the PD array. So what do we expect with this candle? Lower, right? Draw and liquidity becomes lower, and we can be looking for this low. Okay, so where do we go? The hourly time frame. All right, so right here, this is where we tap into that hour or daily PD array. Now, what happens off of that daily PD array? Displacement, right? Displacement beneath a low. Okay, so we come up and we tap actually into this higher 1-hour fair value gap, and we respect it, right? We do not care about bullish PD arrays. Why? Because everything is telling us lower, right? And if you guys want to even do this, we can make it even smaller, right? 1-hour PD array, taps into it, displacement, 1-hour PD array. So market doesn't open until right here, right? But what can we do if we were trading like London or something? Well, go to your 5-minute chart. What happens? A sweep of a high, a change in delivery, displacement through lows, taps that, then continues lower, right? But we don't care about that. We care about New York Open. So what do we wait for? Displacement, key levels, right? So what are we? We're bearish going into New York Open. What happens in New York Open? We go straight down, but we have not hit the draw and liquidity yet. So we come up, we actually make an SMT up here, right? So we form an SMT with this high, and then we displace through this low right here with what? A fair value gap. So the next thing I'm going to do is pull up a picture of the 15-second chart so you guys can see what's actually happening down there, so we don't have to go onto another time frame or anything. So what happens here? This right here, this move higher, is when we first tap into that 15 or that 5-minute PD array. Okay, remember, 1-hour PD array, 5-minute PD array, 15-second chart. So what happens? This line is representing the 5-minute fair value gap. We tap into it, and then we have a new high formed after sweeping this high, right? Change in delivery, continues lower, comes back up. We should not violate this high. Once again, right here, sweep a 15-second high, and then we have another change in delivery, right? And then we continue lower, chop around a little bit, and then we make an SMT with this low down here, right? So right there, that was all formed based off of time frame alignment and the draw on liquidity, right? Daily fair value gap, 1-hour fair value gap, 5-minute fair value gap to a 15-second entry. Boom, right? So the next example right here. So this day, what happens? Well, we tap into a daily fair value gap. Okay. Oops. Okay. Sorry. All right. So what happens from here, right? Where's open? All the way up here, right? Now, I would not expect this move on a Monday, but it did happen, so I guess we can use it as an example. But I would not be looking for this all the way down here for this low. But remember, we hit a daily fair value gap, and New York sweeps an hourly high, right? So what New York does not need to rebalance this because we already have the momentum going lower, right? So if we go down to the 5-minute chart, what happens? A change in delivery to a 5-minute fair value gap. Boom. Right? 1 hour PD ray, an old high, swipes that, displaces, CISD, 5-minute fair value gap. Now, if you're not confident in that, what can you do? You can go to the 15-second chart. Now, if we pull this up right here, boom. Now, this line is representing the 5-minute fair value gap. Now we tap into it right here, 15-second change in delivery, and then what's this right here? A 15-second fair value gap formed beneath a low, right? This fair value gap broke this low, so we should respect it, right? So we can get rid of that now. So what happens? We continue lower, and we actually take out all these lows, so you can just take your TP there, because I would honestly not expect us to have this move lower, right? So this was the obvious draw on liquidity. These lows, right? We actually have equal lows right here. Boom, equal lows right there. Swipes them, TP, TP again, right? So all that was formed from what? A daily chart, daily fair value gap. We swipe out a 1 hour swing high to 5-minute change in delivery with a 5-minute fair value gap that's formed beneath lows, and then we run that draw on liquidity. Boom. All right, so the next one, 4 hour fair value gap, right? Now the next thing we can do is actually even make it smaller to this one up here, okay? All right, now they're probably, oh, there's actually not an SMT there. I thought there would have been. All right, so 1 hour fair value gap. We take out this high right here to a 5-minute change in delivery. All right, and this is New York open right here. Now, what's this right here? Another 5-minute fair value gap, right? What's it doing? It's breaking lows. So this fair value gap is a safe fair value gap, right? And then we actually just run straight down to this low down here. So there's no other entry other than, right? Hold on. Other than this change in delivery right here to a 5-minute fair value gap. So one of these has to be your entry, or you're not going to get it, right? And then you could go down to that 15-second chart. I just didn't feel like scrolling the entire way back right here, because this is in February, so I just didn't want to go the whole way back there, right? Either way, you guys can see 1 hour fair value gap, right? You don't need to use the 4 hour, right? So 4 hour to 15-minute, you don't need to use that, because you can look and see a 1 hour fair value gap. Now, let's see, is there a 15-minute? There's not a 15-minute there. So that's okay, because we had that hourly. So also, this high was formed at 4 in the morning, which means it can stay a valid high. So, boom, another example. Now, for the last example, we'll do a 1-minute example. So let's go to the 4 hour. What do we have here? A 4 hour fair value gap, right? Let's go to the daily to see what we're working. Oh, chop, never mind. I wouldn't even look at the daily there, right? And what hasn't happened yet? We haven't taken this high right here. If we go to the 6 hour, yeah, we haven't taken this 6 hour high. Also, we have a nice candle right here. And we actually have equal highs right here. All right, so this candle would be the main draw on liquidity. Why? Because we have a nice candle range right here. So that 4-hour fair value gap to what? 15-minute. Boom. To a 15-minute fair value gap. So let's get rid of this one. To a 15-minute imbalance. To then what? A 1 minute. Okay. 1 minute fair value gap. But if we are not confident in this yet, because there's no change in delivery, there's not really anything here. So what do we wait for? We can wait for this to be formed as an order block, right? Why would this be an order block? It's because we tapped into a key level and then we closed above the opening price, and then we even made equal highs right here, right? So what happens? We come down, tap into this. Also, we have fair value gaps right here, these two that broke through a high, right? So we come down, we hold them and this order block. We also get an inverse fair value gap here. And then we run that buy side liquidity, right? So yeah, let me turn my camera on. Square is still there. So let me move over to the side a little. So yeah, that is pretty much what time frame alignment is. That is how I find and get my PD raise and my entries. So there shouldn't be too much left actually until I go over how you're going to enter, right? So, and if you guys have been watching my trade recaps and even these videos, I pretty much tell you how I'm entering. So yeah, that's going to be it for this video. I hope you guys enjoyed. Drop a like and I'm out. Peace.